Budget Bet, a special coverage of Budget 2016. We've been bringing you some of the biggest voices that matter this time around. And now I'm in conversation with what the FMCG sector is hoping to hear from the Finance Minister, Saugata Gupta, MD and CEO at Marico, joining us on the show. Saugata, pleasure as always chatting with you. All indications, of course, are that this budget may have a massive social sector and rural thrust. We're calling it a budget for Bharat. FMCG, of course, closely tracks what goes on in the rural economy. And in your opinion, what should the government do if it's going to give a fillip to the rural economy?
I think what is important is continue to invest behind rural infrastructure in terms of also things like a direct benefit transfer. So some of the initiatives which the government has already started, crop insurance, and executing it better, because that will drive more money in the hands of consumers, and that will also uplift in terms of the economy in the rural things, which has been a little stressed.
The agri sector has been in distress over the last couple of years. You've had a poor monsoon for 2 years now. That's had a ripple effect across the economy. What can the government do, in your opinion, Saugata, to try and address this particular issue?
See, I'm of the opinion that you need long-term measures rather than short-term tactical things, which perhaps had been more of a practice in the earlier times. And I'm very, very encouraged by things like the direct benefit transfer, some of the investment that is coming to rural, some of the big schemes in terms of giving electricity, sanitation, because that actually leads to a far more long-term improvement of quality of living. And of course, obviously there needs to be some short to medium term measures like crop insurance, which is being executed. A mixture of both is essential, because that's what I think we need to focus on, a long term rural upliftment.
Saugata, in your opinion, what does the government need to do to push rural income, which will of course have a ripple effect as far as your own industry is concerned?
See, if you really look at it, I think agricultural productivity needs a boost in terms of infrastructure, because if the farmer can create a market for his or her produce, and therefore things which the government is also doing in terms of, for example, encouraging food processing as an industry. So these are the things which is what is important is not just just doing the odd waiver or just giving a subsidy, but what is more important is ensuring better execution of the scheme so that the farmer and the small and the marginal farmer is benefited directly. There is less leakage, and secondly is how do you actually drive disintermediation and ensure that the farmer has a market for the produce, and also invest, and the farmer can invest behind things like much more crash crops and other things.
Saugata, give us a sense also of demand. I know demand has been lagging across India, but how do you see the average consumption demand on the part of consumers changing, or what do you think should be done to stimulate it?
So I think besides besides the issues which are there, which I already mentioned, I think there has been also the issue of 2 consecutive years of drought in certain states. So I think other than the government schemes, we expect if the rainfall is better, that will also drive consumption. Having said that, I must say that the impact in the rural sector has been more pronounced in the case of much more discretionary items. In the case of items which are used daily, items of daily consumption and mass consumption items, the impact has been a little less significant.
Government's promise to reduce corporate tax rates as well as phase out exemptions, in your opinion, how will that play out, and what more does the government need to do specifically for the FMCG sector?
I think it has to go hand in hand, and I'm sure as long as there's a roadmap and which is executed, I'm sure that will play out well for the government and for the economy. I strongly believe also, I think the GST should be executed quickly. And I think lastly, as far as our sector is concerned, what is good for our sector is ultimately more employment, more infrastructural development, more industries, more jobs, and low food inflation. That actually puts much more money in the hands of consumers and better consumer sentiment for us, to actually drive consumption.
Okay, just want to mention some information coming in on Sadbhav Infra that because of what's happening in Haryana, we understand that the highway and toll operations have been affected there. The stock has been taking a knock on the back of that 2.5% lower on Sadbhav Infra, but one of their projects being affected by the ongoing agitation in Haryana, that's the Rohtak Panipat tollway operations, which have been temporarily affected because of that. But let me also come back to you, Saugata. How do you see volumes panning out? Also, what's your outlook on growth for the sector going forward?
See, I believe the input costs are going to stay soft for at least a couple of quarters. We also believe that organizations like us and the entire sector have passed on a significant portion of benefits in the form of pricing to kickstart consumption. We believe that perhaps in the next couple of quarters, urban consumption is going to stage a recovery. Rural is a bit soft, but if we have better rains and as expected in the budget, some kinds of measures to kickstart rural economy, I think it will also it will gradually be better. I must say that the rural consumption, however, the issues I think could have bottomed out by now.
Okay, there's also news now coming in from the railway space. Flashes suggesting that the Indian Railways is planning about a 200 billion rupee borrowing, and that's for the FY17 calendar. So about 20,000 crores essentially in terms of borrowing for FY17. And we were just in conversation with one of the players from the railway space and talking about funding and the kind of expansion plans that they have, and the government. We understand. News coming in that they're looking at a borrowing of 20,000 crores for next year. Very mixed trade across all your railway stocks. There hasn't been too much movement, in fact, as we're waiting, of course, for commentary from Suresh Prabhu in terms of the rail budget. But 20,000 crores is what we're picking up at this point, is the railway ministry, which is looking at borrowing for next year. On that note, completely out of time, in fact, on this edition of the Budget Bet. We'll continue all the live coverage coming out of budget on the other side. Just stay tuned.